I'm Mike Preston at New Harbor Financial. Thanks for tuning in. You've probably been hearing everyone talking about gold hitting record highs and precious metals surging. Maybe you're wondering, how do I get in on this? Should you be hiding gold bars under your mattress? Buying gold stocks you can never actually touch? Storing it with some company 3 states away? These are all questions that we're going to talk about today. With so many confusing options out there, I'm going to break down the pros and cons of each one of these and help you understand which methods make the most sense for different types of investors. Gold prices are up over 30% in the last year. It's been a pretty big move, and central banks around the world are buying precious metals at a record clip, frankly, faster than they have over the last decade. We're witnessing a fundamental shift in how smart money views traditional safe haven assets. After analyzing precious metals for over the last 20 years, and helping clients navigate everything from the 2008 financial crisis to recent inflation spikes, I've seen firsthand what strategies actually protect wealth and which ones leave investors disappointed. In my view, every serious investor should consider having some physical precious metals in their portfolio, not as a get-rich-quick scheme, but really as a hedge against the kind of economic turbulence and uncertainty that we're living through. While each investor has a different situation and don't make any decisions without considering that or talking with an advisor, in general, we recommend around 5 to 10% of investable assets be placed in physical or paper precious metal type investments. So what are precious metals and why should you consider now? Before we dive into how to invest, let's establish a couple of different things. What qualifies as precious metals? What are they? Gold is the classic store of value. Precious metals in general basically talk about gold and silver. These are elements on the periodic table. There's others like platinum and palladium, but frankly, you don't really need to worry about those. Those have industrial uses, and while they're precious and maybe worth looking into, really, I think if you just consider gold and silver, I think you're probably going to be all set. But gold is the classic store of value, and silver is more like poor man's gold. For those that can't afford gold, they buy silver. At least those are the rules of thumb. Silver's been money and gold has been money for as long as we have recorded history. Why do precious metals matter? It is money, always has been money. And also central banks are completely out of control. They've proven since the 2008 financial crisis that they have no plan B. It's always going to be more of the same. I've got no doubt it's going to be more of the same as we approach this crisis and climax of the fourth turning that we're in. The stock market should crash in the next year or 2 or 3, maximum in my opinion. And when that happens, central banks are going to do the same thing they've always done. They're going to print more money. And the more money they print, the more unfair it is to the masses, and the more it specifically benefits the wealthy. It's not right. History shows this is going to unwind in a not so comfortable way. Frankly, precious metals has always been good insurance against the crazy things happening. While we don't think this is the odds-on likely thing to happen, the Armageddon type scenario strongly favors precious metals. Precious metals gain very fast, almost exponential type fashion when there's real crazy things happening, like civil war, runaway inflation, that type of thing. We don't really want to worry people or have you turn into a prepper or go out and sell everything and put your money in gold and silver, but these things are not a 0 probability. Even if they have a 5% probability, gold and silver are really good for the Armageddon type scenario as well. So let's take a look at a chart of gold. This chart goes back to the year 2000. It has a compound annual growth rate that actually exceeds the growth rate of the S&P 500 stock index over the same period of time. And if we're right about the crash in the stock market, it's certainly going to outperform going forward. A lot of people don't know this, and there's just a tiny amount of people invested in this area. Be careful. It's definitely getting warmer in terms of the amount of bullishness that I'm seeing in this sector, so don't just go diving in. But if you don't own 5 or 10%, consider dollar cost averaging in after talking with us or a financial advisor. I think it's going to be a good place to be for the next 10 years. So why are we at these all-time highs? It's really a few different factors. Central banks have been buying. Central banks have been buying pretty much relentlessly. The first one that shows 30 years of central bank demand. You can see that from 1992 to the early 2000s, take a look at those bars in green, there was actually net selling of central banks during that time. But after the great financial crisis, central banks have become net buyers, and that amount of buying has actually spiked in the last couple of years. The next chart I want to show you shows net purchases in tons of gold by central banks. This one goes back to 2014. Take a look at 23, 24, and year-to-date 2025. Central banks have just been buying and buying and buying. The world has woken up to the fact, I think, that the United States dollar is not going to be the world's reserve currency forever. And these other central banks are buying this gold because they're looking at the future and realizing that they need an alternative payment system. I know that's a bit of a leap, but that's our theory as to why this is happening, and a lot of people out there agree with that. So let's talk about some key differences between gold and silver. If we accept that we're just going to focus on gold and silver in the precious metal space, what is the difference? Which one should you buy? Well, gold is a heck of a lot easier to store because there's a lot more value in a small volume. Silver is a lot more approachable from a cost perspective. As I said earlier, silver is poor man's gold. People that can't afford to buy gold buy silver. But silver could very well, probably will, outperform gold in the future on a percentage basis, just because what I think is a still elevated gold to silver ratio. If you take the price of gold and divide it by the price of silver, you come out to about 85.3. So I'm sharing a chart here showing the gold and silver ratio going back to about 1975. The gold and silver ratio over this long period of time has averaged somewhere between 40 and 60, I'd say, on average. It spiked up earlier in the year to about 105. Back during COVID, it spiked to 124. That was a really good buying opportunity. But right now, it's still around 85. If gold doesn't collapse, if this market stays relatively stable and that ratio moves back towards 60 to 1 even, it would mean a big win for silver. Even better if both metals are actually going up in price over the same period of time. So I wouldn't make all your decisions just based on the gold and silver ratio, but the takeaway message here is that silver is still undervalued relative to gold. So let's take a look at a number of different ways to invest in this area and what you want to think about before you do. Mining stocks, gold and silver mining stocks offer a leveraged way to get into gold and silver. The average price of extracting an ounce of gold, or the cost of extracting an ounce of gold, is ranging between $1,200 and maybe $2,000 an ounce for gold right now, depending upon the company that reports. Well, gold is trading up at $3,600 or $3,700 an ounce. For every $100 or $200 an ounce that gold goes up, that's only 3 to 6% on the gold price, but it's a huge boost percentage-wise. It's more like a 10 or 15% boost to the bottom line, because every additional dollar now, once you cover the cost of extraction, flows right to profits in these companies. And so as long as the companies are run well, as long as they don't have any regulatory problems, gold mining companies offer a leveraged entry into the gold mining and silver mining space. Be careful about putting too much in this area. It's notoriously volatile, but this sector is getting a lot of attention now. I'd argue that it's still not fully valued. I will admit it's getting a little more bubbly here, that the temperature is going up in terms of sentiment, but I've learned also not to try to pick a top in these types of things. Oftentimes you'll see a sector that's in a real bull market double, and then when you think it can't go up anymore, it'll double again. If you take a look at, for instance, GDX, the Van Ack Gold Miners ETF, it went from about 30 on its base to about 60 pretty quickly. And it's trading at around 73 right now, approximately. I wouldn't be surprised to see this over time go a lot higher, maybe even double again off of that 60 mark in the next year or two. These additional moves won't happen quickly, but just saying, if you're not in it, you could dabble in it, and there's still some upside, in my opinion. If you're overexposed here, definitely think about selling into the strength and be happy when it continues to go higher, because that's the type of mindset that you're going to need to be successful. In terms of liquidity, they're extremely liquid. It's probably number one in terms of liquidity. Accessibility, also very high. Value or worth, there's a lot of value in these mining shares. They're underappreciated. They've been, unfortunately, the victim of negative sentiment for a long time. Outlook, I think the outlook is very good, even from here, based on this. I'd say that mining stocks are right at the top of the list for all of these criteria. Again, more volatile than the other options, so bear that in mind. We also take a close look at relative strength of certain assets versus other assets, and for many months now, mining stocks have had positive relative strength versus bullion. So mining stocks are better than bullion in terms of relative strength performance. And within bullion, silver is outperforming gold. Secondly, precious metal ETFs. You can buy ETFs that directly track precious metals. We call this paper gold. And this is fine for a lot of people that don't have the Armageddon concern that I talked about earlier. Within this space, there's different types. There's paper-backed ETFs. Some very large ETFs that are known to a lot of people are backed by futures and options and swaps, not physical. Others, and I won't name names for regulatory purposes, but others are backed by actual metal. We prefer the actual physical backed ETFs, the ones that you can actually turn into physical bullion if you want to. You may have to accept a whole gold bar or a whole silver bar, but there's a number of them out there that are backed by real metal. Those are the ones you should stick to. And if you don't want to worry about storage and you want great liquidity, these are excellent. So in terms of liquidity, these are on par with mining shares. Accessibility, everyone can access them anywhere on the planet. Value and outlook are probably on par with the mining shares. So across these four criteria, these are excellent. Mining stocks and precious metal ETFs, whether it's paper or physical back, are excellent and extremely liquid. Then we get into next, the bullion space. This gets a little trickier, and this is where you want to be if you're concerned about an Armageddon scenario or some kind of meltdown on a societal level. Physical bullion, coins, bars, rounds, there's a lot of different options. Most people like the 1 ounce coins. The three most popular, most traded 1 ounce coins in the world are the American Eagle, the Canadian Maple Leaf, and the South African Krugerrand. If you take a look at American Eagles, particularly silver American Eagles, they have a huge premium to spot right now. So this may change, but lately the Canadian Maple Leaf has been a better buy in terms of premium. Take a look at the Canadian Maple Leaf. Again, we're happy to talk with anyone that wants to talk through these options. You can also buy bars of gold or silver. They're going to have a lower premium above spot on those. So this is something that you're going to want to take a look at or talk to an advisor, but in general, take a look at the 1 ounce coins and consider the Canadian ones given the current climate. So in terms of liquidity, these are less liquid. You're going to lose around 3 or 4% round trip because you're paying a premium and you're going to pretty much lose it when you sell it. Accessibility is more accessible, I suppose, than any of the other options because you can put them in a safe at home. Value and outlook are also top tier because there's great value in bullion and we have a very positive outlook on them. Let's talk about storage methods. For physical, probably the best is having a safe in your house or a tube that you can bury somewhere in the backyard, something like that you can get your hands on. That you don't have to worry about anything. If we have some kind of Armageddon scenario or Civil War, you can get your hands on that. That's the gold standard, pardon the pun. Next up or close to that is a safe deposit box, almost as good. A lot of people are worried about a bank closing or not allowing them to get access to their metals. I don't think I'd worry too much about that. If you're worried about having the metal in your house, look at a safe deposit box. I think it's fine. And after that, third best option would be allocated storage. There's a lot of companies out there, Brinks is one example, that will offer you depository storage where you can put your metal in there and not worry about it. They'll charge you on average about 0.5% a year for that privilege. Think about each and every one of these things. The bullion has the ability to get your hands on it, but it's not as liquid and the round trip costs are more expensive. It's kind of like buying and selling houses. You're going to pay 3 to 5% on when you transact those. The same goes with bullion. But if you have to have it in your hands because you're worried about those things that I mentioned earlier, nothing beats bullion. Another way that people buy precious metals that's a little more fun is through jewelry and collectibles, like sterling flatware, that type of thing. I've met some people that have a lot of gold jewelry and it's beautiful and you get to enjoy it at the same time. There's certainly a premium because you're going to have to pay for the labor involved to make those things. Some people even pick up a hobby to make jewelry themselves. This is a wonderful way to do it. You can put a lot of gold, for instance, into like a bangle bracelet. You could easily put 1 ounce of gold into a bangle bracelet and be walking around with nearly $4,000 worth of gold on your wrist if that's what you want to do. And a lot of people in different countries take this avenue as well. In terms of liquidity, jewelry and collectibles are not liquid. That would be at the bottom of the heap in terms of liquidity. Accessibility, it's pretty high. Almost anyone could buy them. So I suppose it's pretty accessible. Worth, some people would say that these are worth or value more than the bullion because bullion in your safe is pretty boring. Jewelry on yourself that you could travel the world with and have that security, probably worth more than any of the other options, actually. And outlook. The outlook is equal to the other options. And so just as a quick recap, the mining stocks, extremely accessible and liquid, give you more leverage. The precious metal ETFs are easy to trade, and you can do so without that round trip commission or loss. The bullions and coins are what you want for an Armageddon scenario, and the jewelry could also be an Armageddon scenario and or investment scenario, and could give you a lot more joy and satisfaction along the way. The key really is to match your investment goals, your own risk tolerance, practical constraints with the right approach. Or you can combine multiple methods for a well-rounded precious metal strategy that fits you. Talk to us if you'd like to talk about that and understand what could fit for you. If you're ready to explore adding precious metals to your portfolio, I'd love to help you. I'd love to help you figure out the right approach for your specific situation. We work with trusted storage partners and brokers, and we can walk you through everything from your first purchase to secure storage solutions. A lot of advisors out there are not talking about this. We have years of experience, and we'd be happy to help you. Just reach out to us. We'd be happy to talk with you and help you. The link is in the description below, so click on that. Reach out to us. We're offering free portfolio reviews to people that want them. We're happy to have a chat with you. We offer a 30-minute chat to anyone that wants to have it. Whether or not you do business with us, don't worry about that. We're looking to help people. So reach out to us, chat with us, talk about precious metals, how they can work for you. Please subscribe to our channel and like this video. Subscribe to notifications. We love that you tuned in today. Thanks for watching. Can't wait to speak with you again. I'm Mike Preston at New Harbor Financial.